Mr. Cooper, you're on.
Thank you. Thank you. I want to thank everybody for joining our presentation today. Again, we apologize for the technical difficulties that presented us from sharing this presentation with you last week. However, it turns out that we're now able to provide more timely information, in particular information about the latest round of COVID-19 financing. Our company has a strong partnership with the Cosmopolitan Chamber of Commerce, Chicago's oldest African-American Chamber of Commerce, and we serve as a technical assistance firm to the Illinois Tollway, providing support to small businesses throughout the state of Illinois. During the crisis, we and our partners are committed to do all that is within our power to help business in our community survive and thrive when we're able to come out from this crisis. As we acquire information that we believe will be helpful to you, we intend to share it as quickly as possible. That being said, I'm going to turn this mic over to Ms. Diana Harris-Hennington to introduce our featured presenter, a friend of mine going back 20 years now. Diana?
Thanks, Matt. And thank you for in support of the Illinois Tollway Technical Assistance Program, coordinating this timely and important workshop to update us on how we can try to benefit and survive in this environment. And I may have you beat, Matt. I think I've known Calvin more than 20 years on this one, but I have the distinct pleasure of introducing someone that has offered many years of vital services to the community. Our first presenter is Calvin Holmes. He served as the president of the Chicago Community Loan Fund since 1998. This organization is a nonprofit certified community development financial institution that provides flexible, affordable, and this is key, responsible financing. They offer technical assistance for community stabilization and development efforts and initiatives that benefit low to moderate income neighborhoods, as well as families and individuals throughout the Chicago metropolitan area. So Calvin, I'm going to turn the mic over to you.
Great. Thank you, Diana, for that generous introduction. It's always good to connect with you. And I also want to just take a second to thank Matt Cooper and his customer-centered team for this collaboration and the opportunity to share information with all of you. Before I describe the Chicago Community Loan Fund's Chicagoland COVID-19 Community Development Resource Guide, and we will talk about the Payroll Protection Program in a little bit, let me tell you a little bit more about the Chicago Community Loan Fund. As Diana said, we are a certified community development financial institution, and we are fully committed to providing financing and technical assistance to Chicagoland's lower income communities through this crisis and beyond. We believe that every community should have the opportunity to rise to its full potential, and we do this comprehensively by providing technical assistance and investing in 4 pillars of community well-being: housing, both single-family and multifamily development. Some of our customers that you might be familiar with, and hopefully a few of you are on the phone, Community Mail Empowerment Project and the massive Oakwood Shores development on the near south side. We support, as another pillar, community facilities, including arts and culture, recreation, education, and nonprofit office space. I know all of you have appreciated and been entertained by performances at the Black Ensemble Theater. We've all had a chance to enjoy an exhibition at Stone Island Arts Bank. Many of us have played tennis at the Access Tennis Campus on Washington Park, and some of us even sent our kids to school at the Betty Shabazz International Charter School. We're also supporting retail operations and brick and mortar development, and we have some select operating businesses that I'm sure you're familiar with, the brand new UPS store on 63rd Street at Cottage Grove, and who hasn't had some of Uncle Remus's Saucy Fried Chicken in Washington Park. We also provided the development loan for Inglewood Square in Inglewood and the Joel Osco. And and Woodlawn. And last but not least, our fourth pillar of support is social enterprises, worker-owned, and food co-ops. And some of you know that there's a new African-American-led social enterprise operating in Roseland, Building Self-Determination, which is training our people in robotics so they can get long-term secure jobs in that sector. So as you can hear, the Chicago Community Loan Fund is actually not a mass market, non-real estate small business lender. But we know that small businesses are a fifth pillar of community well-being. So we strive to be a great partner for those non-real estate mass market small businesses by linking them with micro and small business lenders across the region. And that's one of the reasons why we created our COVID-19 Community Development Resource Guide. We knew that the community enterprises, both for-profit and nonprofit, would need a real-time, curated directory of grants, loans, and other information to help them navigate the uncertain waters of this historic crisis. So a month ago, we reached out to Project Forward, a for-profit small business advisory firm led by Chief Solutionist and founder Christyn, who you'll hear from shortly, who is based in the community, to conduct the research and to help us build the guide. The guide took about a week or so to develop, and we strive to update it 2 to 3 times per month, adding and subtracting from it as information becomes stale or becomes newly relevant. And its 43 pages contains information with hyperlinks on the grants, loans, and other resources for both for-profit and non-for-profit organizations, broken down at the federal, state, county, and city level. Each resource also tries to show the user who's eligible, what the funds can be used for, what dollar amounts are available, and we have hyperlinks for each resource so that you can contact that site. And we also try to keep it updated as to when applications are due, particularly if a particular resource is expiring. Of course, there is an enormous amount of information on all the big programs that most of you are familiar with, such as the SBA's Payroll Protection Program, the Economic Injury Disaster Loan Program, the Illinois Small Business Emergency Loan Fund, Cook County's Community Recovery Fund, and the City of Chicago's Resiliency Fund. But we also sought out specifically grant programs that we thought you would benefit from, including programs being offered by the U.S. Chamber of Commerce. They have a Save Small Business program. They're also running the Red Backpack Fund, which is specifically for women-owned businesses. Some of you also probably know that LIFT has a grant program as well called the LIFT Small Business Relief Grant Program, and it's supported by Verizon and Sam's Club. We even found some resources for people who are in the restaurant business, and there's a full page in the guide on food and hospitality supports. The guide also includes additional information on how the government is reducing fees, waiving fees, and providing extensions to make it easier for you to stay in business as you navigate the crisis. As you can imagine, the non-for-profit section also mirrors the for-profit one and has a long list of grants as well, such as Arts for Illinois for cultural organizations, the Chicago Community COVID-19 Response Fund, which is supported by United Way and the Chicago Community Trust and its board of direct service provider organizations. Northwestern Hospital has a public health agency grant program. The Crossroads Fund has a critical response fund for grassroots organizations. Landmarks Illinois has a fund for historic preservation organizations. And we think that a number of you will appreciate that there's a link in the guide to the Chicago Lawyers Committee for Civil Rights to help for-profits and nonprofits secure legal advice that they might need during this time. For example, negotiating with your landlord. We also include a section on the CDFIs in the region, including CCLF. You can page through the guide on our website, and you can easily download or print it out so that you can research it at your leisure. I strongly encourage you to mine the guide for resources that you might not be aware of. I guarantee you'll find some. So please go to cclfchicago.org. I think there's information is on the slide that should be in front of you, and use the guide. If you have questions about it, or if you have a resource that we don't know about, please send that through to info@cclfchicago.org. We'll take questions about the guides when we get to the Q&A, so thank you for sending in your questions. So now we will turn to the Small Business Administration's Payroll Protection Program. And as you see, and as you know, it's actually featured in the guide And we included it there because we know that it's a hugely important resource for nonprofits and for-profits. So I think everyone on the call knows that this is the second round of it, and that Congress approved just last week. I think the president signed it on Friday, the second round of payroll protection program funding for $310 billion. There was a $60 billion set aside for quote unquote smaller banks, $30 billion for banks between the size of $50 billion and $10 billion, and then $30 billion for banks and other lenders at $10 billion and below. And at that $10 billion and below, it includes the minority depository institutions, credit unions, and CDFIs. So those are probably the folks that if you have not already received the PPP loan, you want to focus on. And I'm going to turn the baton to Christyn, who's going to provide details on how the program is working today and how you might still be able to access it. Christyn.
Thank you, Calvin. So just to give a very quick overview about the Paycheck Protection Program, it is a forgivable loan if you use 75% of that for your payroll expenses. And it will cover up to 2.5% or 2.5 times of your payroll costs. So 75% of your loan should be used for wages, various compensation, but it cannot include anything over salaries for $100,000 and for people who live outside of the United States. What some of the things that we have experienced in operating the call center, so CCLF had an opportunity to support primarily nonprofit organizations by offering a pop-up call center. And some of the challenges that we saw, I think, are pretty much typical of what small organizations encounter. And so one is ensuring that all the documentation isn't. So many times the government is asking for very specific documentation. It's not a lot, but it is what it is. And then on top of that, the lender had their own required documentation. So if you could go to the next slide. Some of the things that we have encountered is the fact that many of the applicants were not clear about the rules of engagement for PPP. And it's not because it was the fault of the applicants, the rules were just not very clear. So the SBA had their very easy application that only required maybe 9 fillable boxes, a number of signature points where you had to initial, but the information was pretty basic of what they asked for. However, if you're not clear of what your lender is seeking of you, the additional documentation became somewhat murky. The initial request was that people go to their home lender. But if you follow the news and you might bank with an institution like Wells Fargo or Chase or B of A, some of the backlash, especially after the first round of PPP, was that instead of it actually being a first come, first serve process, it was really them leaning to favor the larger institutions. And part of that reason is purely money. Organizations do get fees. Lending institutions receive fees from processing the PPP applications. And those fees are based upon the size of the loan. So it could range between 1% and 5% of the size of the loan. And so realistically, it was more monetarily advantageous for the lenders to give money to organizations like the Lakers and like Shake Shack instead of the local small institutions. And so this is one of the things as we are considering any additional round of funding from the government or anything in the future that is either backed by the SBA and has the still the underwriting criteria of the lender. This is where we want to ensure that participants understand what they're applying for. In many cases, there was a misunderstanding between the economic injury disaster loan and PPP. So some of the uses of those loans, and in many cases, a lot of people who were eligible for PPP were also eligible for the EIDL loan. And in some cases, EIDL may have been more advantageous for them, but they just did not understand the difference. Another concern that we encountered was a large number of the callers. And just in me working with small businesses, people will classify employees as independent contractors as a mechanism of bypassing payroll taxes. However, when it comes down to situations like this, we would initially say, well, how many employees do you have? They'd say, I have 5 employees, but the reality is the only one that they can count would be themselves, and they had 4 people that they issued 1099s. And so really for organizations to think through, many of the grants or even the loans that are available are asking for employee counts, not independent contractor counts. And so as we are considering life after COVID, or even if you're using COVID as a reset period for your business, how can you afford employees? Reviewing your pricing structure and your pricing model to ensure that you have the ability to eventually grow into a space where you can have employees as opposed to trying to bypass certain things by having independent contractors. Some of the other things we encountered is people not answering what they were asked to answer. And so the documentation from the SBA was very clear. Send 940s, 941s. If you're this type of business, this is what we need. And in talking to a number of clients, they chose to substitute documentation. One person literally said, well, we sent over a report that was about 100 pages long because we didn't have our 941s. Their lender did not review that application. And so as a result, it delayed them being in queue for the loan. And the reality is just due to the great sense of urgency, as well as the great sense of demand around the funds that were available, the lender doesn't have time to come back to you and tell you what was wrong with the application. They just don't respond to the application, which leads to the next point of digging your well before you're thirsty. Many of the people we talked to did not have the best relationship with their home bank. In some cases, it was a very transactional relationship. And especially in the day and age of online banking, mobile deposits, it reduces the necessity to often go into the physical branch and to have these face-to-face conversations with your lender. However, that becomes a problem when you need money. And so in some cases, what CCLF had the opportunity to do that some of these home banks did not have the opportunity to do was advocate for the participating client. That's what your banker is supposed to do. Your banker should know and have an intimate relationship with your business. Your banker should understand your plans for growth. Your banker should not just be trying to sell you products. You shouldn't just get a call from them when they have a new credit card or a new product that they're trying to get you to sign up for. Your banker is really a partner in your business. And if you feel like your banking institution does not provide you that partnership, it is absolutely a time to consider or reconsider who is a better fit for you. And so in talking to some businesses, some nonprofits, one of the challenges, especially in the first round of PPP, was that the lenders were not sure how to process some of these things for nonprofits, just because it wasn't what they were used to doing. And so in many cases, what we were hearing was they were holding some of those applications back, or they weren't accepting them from nonprofits. As soon as April 3rd rolled around, they said, okay, well, we'll hold off on doing that because we don't know what to do with that. So you really want to make sure you are banking with an institution that understands your business. And even furthermore, from underwriting criteria, are you within an industry that your lending institution feels comfortable underwriting? So meaning every bank is not for you. So while many times organizations are selecting banks on the basis of convenience, so a lot of times when I talk to organizations and I say, well, how did you pick your bank? And they say, well, they have a lot of ATMs, or they're close to my office. I can do a deposit fairly easily. That should not be the only criteria that you are utilizing to determine who your lending partner is. If you have a conversation with them and you ask, are there any industries that you guys do not lend to? And especially as we are approaching a time of fiscal and economic recession, those industries often change. Retail in 2008, retail and restaurants were like the plague for a lot of lending institutions. And in general, those industries are a little more fickle and a little harder to predict just based upon the way trends in those markets go. So that often means it's more difficult for you to receive capital from a lending institution or a traditional lending institution if you're a business operating in that space. And so you don't want to find that out when you actually need some money from the lender, but many people are not understanding how to evaluate that partnership before they enter into it. Going to the next point of the role of your accountant, you should have an accountant who is, and this advice is more so for profit institutions as opposed to nonprofits, but some of the things that we encountered is the accountant's role has often been to limit the tax liability of the business. This becomes problematic when it's time for you to go for a loan because on the books, you look unprofitable. Even to the IRS, if you declare a loss over 5 years, they will say you are not a business, but you are a hobby. And that also becomes a problem when it's time for you to go for a loan. So while the SBA has said, okay, we're guaranteeing these loans, at the end of the day, the underwriting criteria still is in the hands of the lender. And the lending institution, if they look at your books and they say, oh, well, you know what, you aren't making any money, so we don't know if you'll be able to repay this loan, it presents additional problems, even when you do have an entity like the SBA that is guaranteeing the loan. No lender wants to take the loss because even at the return of the repayment of the loan proceeds, they still are out of time that was invested, hours for whoever processed that loan, all the eyes that looked at it, that they're not recouping that cost. So it still ends up being a loss for the lending institution. So if you're working with an accountant and you have told your accountant, just don't have me pay any taxes, you may want to rethink that strategy. Because in the long term, especially if you are ever in a point where you're trying to seek any sort of outside financing, it becomes tremendously difficult for that to happen. I think I've adequately touched on the know your lender, but that is, as Calvin mentioned, within the second tranche of regulations, money was set aside for really the community lenders, the smaller organizations. The credit unions, the ones that are not able to typically run commercials, but they're the ones that have a different level of investment in your business. They will be a little more challenging on the time front in the sense of developing the relationship as well as even servicing the account, because they will not usually have all the bells and whistles that a lot of the larger institutions do have, but there is a trade-off for that. And so in some cases, these smaller lending institutions we are having success with clients that we knew a larger institution would not take. And in fact, the larger institution didn't respond to their loan application. So we had to turn around and send them to a smaller institution. And guess what? They got an approval in 3 days. Like, everybody's working over the weekend. Everybody's putting in 12, 13, 14-hour days. But they did get a response. And that was likely not with a larger organization or even their home bank. It was with one of these community-based lenders. And my final point is delayed is not denied. So in many cases, a lot of the people who applied for PPP had to go to another lender after they applied with their home bank. So many of the calls that we took in the pop-up call center, people had applications out with larger institutions and had not heard anything. They didn't know where their application was. They didn't have a person to call to get a response. And Calvin and I have talked about this. There really is not a real resolve for that, just due to the volume of applications that the lenders were receiving. Everybody has staff. I mean, there are some organizations that pulled people from their HR departments to have them start to vet these loans, because the volume the SBA has received over these 2 releases of funds exceeds anything they've done over a period of years. So we're talking about massive amounts of volume, and in a perfect world, everybody could get a response. But the reality is, including the large institutions, everybody is trying to scramble to respond to something that nobody really was able to anticipate. So all of us are literally building airplanes as we're attempting to fly. And some of us have been able to do it better than others. But at the end of the day, when you're the client and you don't know if you're going to be able to rehire staff, or you're on your last leg and trying to keep your doors open, having someone to actually let you know where things are provides a sense of relief that unfortunately many people did not get the opportunity to experience. So in this case, funding will run out relatively soon. If you are with a larger institution and you have not heard anything, you may want to reconsider and apply with a smaller organization or even fintech company. QuickBooks, PayPal, Cabbage, these are lenders in the space as well that have gotten into doing PPP loans, and these companies can't charge fees for it. They get their fees on the back end, so they're not charging you anything additional to do that or participate. But just understanding what the best options for you and your organization are is something that I don't think it wasn't discussed when you hear people talking about the PPP. You hear about the forgivable loan, you hear about the 1% interest, but you don't hear about really how to navigate that space between your lender and your organization. And that's all I have.
Christyn, thank you. That is, I think there's a really good presentation, a lot of good valuable information there. One of the questions that we see come up here is relative to the whole forgiveness piece. Are there any real rules yet about how the forgiveness? I know they talk about that you got to make sure you got 75%, but how do you document that when the money comes in?
There are very firm rules around forgiveness, and that was definitely one thing we did at the pop-up call center, was to ensure that the clients understood what that was. And so especially for folks that were doing 1099 and a lot of documentation that was not going through a third-party system, that was one thing that we highly suggested that they do, because there needs to be some verifiable information. So how do you do that? You have to show that you maintain your staff levels for at least 8 weeks. So what's the best way to show that you paid them is through a third-party service provider. So not advocating for any one over the other, but just some third-party entity that can help you manage that process. Because a lot of it boils down to the same problems that folks were having on the front end of the application will be the same problems they may have if they don't address them on receiving forgiveness on the back end of this application.
So by a third party, you're talking about the payroll company that you use to process your payroll?
I would say a third-party payroll processing entity, even if you're doing it with an accountant that's offering you that level of service, just someone that you can potentially push a button and generate a report with to show this information is what we were advocating for people to do, because that's that's what you have to show to the bank. And keep in mind, it is the lender that is determining if they're going to forgive the loan, and only forgiving the principal. You still have to repay the 1% interest.
Oh, that's important. I didn't know that. Okay. The repayment term is when do you start that again?
They are giving you forgivable for 6 months, and then you have within 2 years, but they say you can max it out at 10 years. But again, some of those things are going to be within the hand of your lender as far as what they allow you to exercise.
Okay. All right. The other question that we see here is locally, in terms of small banks, are there any names that pop up that you might want, you're able to share with us?
Sure, Matt, I'll take that one.
Okay, thanks,
Calvin. Sure. So as I mentioned in my presentation about the guide, we try to keep our ears to the ground, so to speak, about the small business lending ecosystem. So I want to say who we have been working with closely, but qualify it by saying that it doesn't mean that this is an exhaustive list. These are just the folks who have actively reached out to us to say that they are willing to accept a small client, a nonprofit client, a more complicated applicant, and to try to support their application and get them into the SBA system. So I just need to qualify that this is not an exhaustive list. There are probably others out there. These are just the folks that over, Christyn, I would say the last 4 or 5 days we've been working closely with. So the Community Reinvestment Fund, which is a community development financial institution based in Minneapolis that has Chicago operations, is very active. There's a Providence Bank and Trust. I think many of you may know that they bought Urban Partnership Bank and still have branches in our communities. They're deeply engaged. I've been on a number of calls with Seaway's Second Federal Self-Help Credit Union, very eager and interested in helping you with the PPP program. A bank that's actually headquartered downstate in St. Louis that has operations in suburban Chicagoland also is active and interested in your business. Midland States Bank. The Chicago Neighborhood Initiatives Microfinance Group is a CDFI, and it's getting its infrastructure put into place, but it looks forward to being a PPP lender. We're told that CIBC Bank has a specific micro loan program. And as Christyn mentioned earlier, there are a number of fintech, sort of online lenders, if you will, who, at least by judging from their website, they are actively engaged right now. Sites such as Fundera, Cabbage, and Lendio.
Okay, that's good. That is pretty good. I will say this though, relative to the banking situation, one of the things that this points out is that in Chicago, we were the home of some really good neighborhood-based banks that are no longer around, primarily because they did not enjoy the support, or the problems that came up in the banking institutions or the banking industry. And so this kind of highlights the need for us to kind of support strong local banks, community-based banks as well. Now, Calvin, you also mentioned there's some credit unions as well that are involved. Are you aware of any of the credit union names you can put out?
Yeah, the one credit union that comes up in many conversations, Matt, is the conglomerate of Seaway, our former Seaway Bank, and Second Federal, which is, I think, their core service areas on the southwest side. And both of those credit unions are divisions of the National CDFI Credit Union Self-Help.
Okay. And
we are in touch with their lending officers, and they are actively seeking new PPP customers.
Great. Yeah. Now, the guide that you guys been worked on is an excellent guide. We've sent it out. We sent the link out along with some of the emails that we've shared with other people, and you've gotten high praise for how comprehensive it is. The thing that Christyn pointed out to me was that this is a living document. meaning that as you learn new information, it is being updated, and which is one of the reasons why the link that we share with everybody is important, so that you can go back to that link as the document is being updated. Is that correct?
That's correct, Matt. Just a couple of real-time examples on that. So, Christyn, correct me if I'm wrong. So, LISC actually had the sort of Verizon Small Business Grant Program, which we listed in the guide in our first iteration. The window for that grant application closed on April 4th. So when we republished the guide a week later, we actually removed it because it was no longer a viable option for people. Subsequently, I don't know the machinations behind the scene, but LISC must have gotten additional funding from Verizon. Sam's Club is also a sponsor of their Small Business Relief Grant Fund now. So they reopened the portal to have people apply for these grants across the country. We added it back to the guide with information around when applications would be due. If you look at the guide today, as some of you are actually looking at it right now, you'll see that we list the Chicago Small Business Resiliency Fund, which unfortunately closed on Friday. We're having all kinds of conversations with the city. Right now, they're not saying that they're going to reopen it. We're going to leave it there for a little while longer, hoping that sheer demand and hopefully other sponsors will step up for the city and they'll be able to reopen it. But ultimately, as you pointed out, Matt, it's a living, breathing document. If the city won't keep the resiliency fund open for new applicants, we'll remove that from the guide so that it remains curated, real-time, and relevant. And we would like for the broader community to use it as a resource. Christyn and her team worked very intensely on it. We scoured hundreds of websites, had multiple conversations, did all kinds of fact-checking and verification to try to make sure that the hyperlinks for each resource is real, is live, is active, will take you to that site, and that the information is fresh and relevant. So we do hope people will use it to try and find multiple sources of additional support to help them negotiate this unprecedented event in our lifetime.
Well, Calvin and Christyn, I want to thank you for taking the time today to share this information. I know for a fact that you are being called away to other presentations, and this becomes a really hot topic. And I know you're being called away for a lot of different areas. So again, I really want to thank you for the time you've provided for us on this presentation. And I will remind everybody that the information relative to the guide, if you received an email from us, we will send out another email with another additional link to it. And we're going to strongly encourage everyone to visit the guide. We will also have a copy of the recording of this presentation available on our website for anyone who didn't get a chance to see it. Again, thank you, Christyn. Thank you, Calvin. Thank you, Diana.
Great, thank you.
Again, thank you, and good luck out there, people. Stay safe, stay virus-free, and practice that good social distancing. Thank you. Goodbye.
+1312